everybody. This is Anenzi Awana, better known as Z, coming to you from Awana Holdings, and this is the Note Edition. I have my guest here, the young Dr. Jason Engerman. I don't know, he probably doesn't like me calling him the young Dr. Jason Engerman, but everybody's young to me because I'm a little older. So I'll tell y'all a little bit about myself as if you've not seen any of my previous videos, you know that I've retired from the Navy some years ago and then just recently retired from the federal government back at the end of 2021. So it's been just slightly over a year since I've retired and gone into note investing full time, and I've been loving it. So but without further ado, and not to keep you so long, I'm going to introduce again the young Dr. Jason Engerman, who is a portfolio manager, note investor, and you know all the good things. And Jason's going to talk to us a little bit about what he does as a portfolio manager and a note investor. But first, Jason, tell us a little bit about yourself.
Sounds good. First and foremost, Happy New Year, everybody. I know it's January, it's about the third week of January, but we always got to acknowledge our peace and our blessings, and it's a blessing to be here in 2023. Second of all, thank you, Z, for your service. Much appreciated. Honor. Hats off to you for your service. And third of all, I'm happy to be here. It's a wonderful place.
Happy to have you.
Oh yeah, I love it. I love it. Thank you so much. The note investment game has really brought a new lease on life for me, especially considering COVID, you know, and we're just coming into that era. It's a COVID era. People are talking about we're coming out of it. No, now we just have to live with it. We are in a COVID era. It is not a post-COVID era. So things have changed. A lot has changed. We are stepping into a new global economy of the Great Resignation. And now it is of the great layoffs. As you haven't been paying attention, much of that is happening. You can go to Google, Wayfair, Amazon, etc. People are laying off people left and right. And so we've got a new economy. We've got a new lease on life. And so this is a part of my journey and my story. So first and foremost, for me, Dr. Jason Engerman. My doctorate is in learning design and technology. So I do systems, I build learning environments. My particular expertise is in interactive media and underrepresented population. And so that's where I made my bones in a tenure track position out of a local university here. And I've worked for many universities. I've done quite a bit of research at the national level. I've got plenty of publications out there. So you can go check that out on Google if you like.
Wait. So where are you located again?
I'm located in Scranton, Pennsylvania.
Pennsylvania.
Home of The Office, and Jim Carell, I think his name is, right? So, yeah, not born and raised there. My background is actually from the Bronx, born and raised in the Bronx, the BX, baby. And then migrated to the Poconos, and then spent a lot of my time in college. Let's see, Penn State University, East Stroudsburg University, Wilkes University, back to Penn State University, over to East Stroudsburg University. So a lot of universities, a lot of schools and schooling. And then migrated here to Scranton to be with my wife and my family. So my wife, my beautiful wife, and my 3 kids, twin 5-year-olds and an 8-year-old, is why I'm here in this position today. Fast forwarding a little bit from my tenure track work and my research work, building out ecosystems and learning environments across the nation and doing national research and building funding and resources. I wanted to engage in community development, and I've always done that work. I've always done that work ever since I was in New York when I had my first job at the YMCA in Flushing, Queens. And that was as a camp counselor. And then it was a lifeguard and a lifeguard trainer and a waterfront director and then a snowboard instructor, right? Et cetera, and then an American Red Cross certified lifeguard trainer, and then, oxygen administration, et cetera.
I see the track with education.
There you go. Education, mentoring,
coaching, yes.
For the community. I've always been about that. And then I went into high school education as a math educator. And then I got my master's, and then I went to the higher ed, right? So forth and so on. And so this was that next evolution for me. It came pretty obvious that for me in education, it was what I would consider a ceiling. And the ceiling was that it was limited and bounded by those infrastructures, those educational infrastructures. And they were, whether they were state driven, whether they were privately driven, even at the national level with the National Science Foundation, doing work with them, there was always these boundaries that I didn't necessarily agree with. And so when I found note investing, it was an attempt. I would say I graduated to note investing. It was really an attempt to understand how economics impacts and influences communities, especially particularly communities of color. Right. Those are the ones that I was really attracted to, obviously being a person of color, coming from the Bronx, the boogie down Bronx, the real Bronx,
I
80s
relate.
Bronx, okay.
Harlem girl here, so you know I know.
Yeah. So for me, and I always did that. My dissertation was on boys and gaming. I wanted to understand why boys were an underrepresented population within education systems and how to improve and change that. My work right now currently is with an Empower group. It's called the Empower Conference, and it's women. It's all women, right? And so it's how do we empower women to understand, acknowledge, and step in and manifest their worth, right? So we have a theme called Fearless. And so I've always been doing that work. And when I looked at economics, I looked at stocks, I looked at crypto, I looked at trading, which all those things I still do. And then I looked at real estate, and I saw that real estate had a unique opportunity, especially with tax liens and tax deeds. So I started playing in that space. We at one point owned 4 properties. We live in a duplex, so we understood it and been around it. My father's in construction. My father-in-law is in construction. So we've always been around real estate and always been around it on the consumer side.
Right.
So then I said, well, how can we impact communities from the home and transforming through real estate investing? And so then I started to migrate up the ladder or the rungs, everything from wholesaling to looking at bird dogging, so looking at flipping, right, and landlording, right, the whole bit. You know, real estate agents. My aunt is a real estate agent. My uncle flips homes. So you do a deep dive into that, and being a terminal researcher with a PhD, you got to go deep.
You go into research.
So, do the research. And the research for me from a learning perspective is you got to do it. You got to be an apprentice. You got to learn. You go back to school. You got to educate. Those are things that I love. And so note investing, and which is where we met in the note assistance program. And through the note assistance program is a real community. We're really engaging each other on, really complex topics of note investing across the 50 states with all the various jurisdictions and townships and municipalities. And so, long story short, I found out note investing, being the bank, is really, in my opinion, the top of the food chain. I mean, owning the note, owning the finances, owning the rights, the legal rights, are really a fundamental structure of how this country was built. Central banks, wink, wink. Right? Alexander Hamilton. Go do your research. Okay, go do your research. So, understanding notes, debt tools, debt instruments, legal instruments is at the top of the food chain. And I said, if I'm going to impact communities in ways that are really impactful, I've got to be independent. I have to find a way to become independent. And I've got to find a way to build and find people that I can work with and want to work with and get excited about working with, that bring their own skills and flavors to the table without any boundaries, boundless. That's how I ended up here.
Right.
And I just fully leaped into it. I dropped out of my tenure track position. I resigned last year, well, not 2 years ago, technically, I guess, August of 2022. Yeah, so recently. And now 3 months in, I'm 1 quarter in. I'm still alive.
I was like, yeah, how's it been? I don't know why I thought it was a little bit longer than that. So it's been a short time. So how has it been for you? Are you missing doing your teaching at the higher level, or is notes kind of fulfilling you?
I'm always an educator at heart. It's just what you're teaching and how you're doing it.
Different stuff, right?
So now I'm educating my clients. So now I'm educating my business partners. So now I'm educating, people who will listen and want to learn more about investing in alternative assets, and particularly note investing in owner finance and real estate, right? So
Right.
now it's a different student that is engaged, that is mature, I think, more mature in their, not just their financial literacy, but their life understanding, which is so much better space for me, I think. It fits who I am now today, because you go through these different phases as you grow and learn. And it fits my family better. Now I take my kids to school. I
Yeah,
pick
more
them up from
freedom.
school. On
Freedom.
the weekends are mine. I shut it down. I shut it down and say, nope, can't do it, right? Create my own boundaries. And one of the best parts of it is I ain't got to do other people's jobs. I'm doing a lot of jobs, let's be clear. I'm working harder, more
But
longer,
they're your job.
yeah, but they my jobs. Okay. I ain't go hire a finance person that don't do finance. You hear me? I ain't go hire an HR person or a secretary that don't secretary and do that work,
Right. Right.
So it's me. Um, so I'm enjoying it. I'm enjoying the space. I'm enjoying the freedom. I'm enjoying the opportunity to kind of hunt and kill your own, and then you have great pride in what you've hunted and what you've killed and what you slayed, and
Right.
set your boundaries, and then you recognize, man, you ain't charging enough for that thing. You ain't charging enough for that,
Say, hey,
you know.
get the
But
next
it's a
one.
learning
Get it on the
process.
next one. That's all right. That's not the last
it
one.
it's built on a lot of faith too, in relationships, which I really enjoy, because now it's the relationships that I want, because
Yeah.
I can grow them further, step into them more, and grow in many different ways. It's bilateral. It goes both ways. So I'm not dictating what's important. I'm listening. I'm listening more, I think. So I'm becoming a better person. I think my kids are seeing a better version of me. My wife's seeing a better version of me. It's better for my life, my lifestyle. And now it's just about me getting better.
Yeah,
Yeah.
because now you have that freedom to do what you want when you want.
Yeah.
At least for me, a lot of people talk about their why, and for me, it's the freedom. It's the freedom. It's not so much about the money or the profit. Of course, that's going to come, but what that profit allows you to do is be
Yes.
free.
Oh my gosh, that freedom. Yeah. There's a hard lesson in these past 2 years about what's important and
Mhm,
what you value. And for me, I had to turn that back inside. My kids needed me more. My
mhm,
wife needed me more. The household was becoming dysfunctional, in ways that I didn't expect or anticipate. When you remove your presence from
mhm.
from your household, it has an impact,
Right.
especially as a male,
Mhm.
in society today. So that's a
Yeah.
lot deeper than I probably need to go here,
I
but that's the reality.
love
When
it.
you ask
I
me the
love it.
question, when you ask
It's
me the
good.
question,
No,
it's
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 cool.
it's
It's
therapy,
I
and it's
love
it's
it.
important because the impact, I think, with notes is very powerful. I have so many stories that I can unload on you in
Mhm.
terms of, here's two. One woman, the house burned down. It was irreparable, and she had paid faithfully, which is really cool. And she asked, "Can I buy the home?"
Okay.
So what was really neat is, because it was my client's property, I said, here are your numbers, right? Here's your 150 some odd percent return,
Mhm.
because it's insured. This woman wants it for padiddle.
Mhm.
We need to offload this. She needs this, right? And it was an easy conversation. It was like, yep, let's do it. And so we did it. It took longer than we expected and anticipated. It was the first time we had done something like it. But at the end of the day, it was very rewarding and worth it, because, luckily, her and her son were safe, in this home, but we were able to have that decision and that power to make that decision in that community, to say, she wants this home. She wants to love it. She wants to take care of it. She wants to rebuild it. What do we got to do to make that happen? We made our profit. We need to be out of this, and let her have it. Another situation with a young man. He was in prison for some time, and he got out, and he said, look, I thought the person that was in there would pay off the bills, but they haven't been. So what do I have to do to fix this? And so we jumped through hoops to make the legal contract, and reformat the contract. It's called remod, right? Remodify the contract, put
Right.
all the arrears on the back end of it, start him fresh, and get him going. And that was a decision we were able to make, right? I mean, people, it was petty theft, his crimes, but everyone needs a place to stay.
Right.
You serve your time, you get out, you need a place to stay.
Yeah.
So we had the flexibility and to do that, to provide that. And that is really
The
unique and
lovely
really
thing about notes. Yeah, the lovely thing. So Jason, as we were talking a little bit earlier, I just thought about, I think you are the first portfolio manager that I have interviewed of all the people that I've interviewed. So I'm just really interested to know what a day in the life looks like as far as the assets that you are managing, the things that you go through with that. Yeah.
Yeah. You asked a loaded question to a professor. Oh my goodness. I don't know if that's a smart idea. Because then I gotta unload. No.
We got time. We got time. We got time.
We might be here for a while. I don't know how much time
No
you got.
time limit.
No, the main goal of my job is really simple. It's to take clients that I believe in, that I can learn and grow from, and then to help their assets manifest in ways that they expect. Okay. And then supersede that, right? With my processes and systems. So I would hope, and this is things that I'm working on still, obviously, I've only been in this full time 3 months, is that I can build processes, systems that can speed up the time that the portfolio performs in ways that they would like them to.
Now let me stop you there. Let me stop you there. So
Sure.
people always say you need processes and systems. What are you talking about when you say processes
Yep.
and systems? What
Yeah.
kind of processes? What kind of systems?
Yes.
What does that mean?
Yeah. That's great. And so the note business has notes have life cycles. The first step is understanding what the life cycles of a general note is. Problem is that when you have a different note, it has a different life cycle. So it has a starting point and an ending point in completely different ways. And then they have these little branches that kind of pop off of them. So when I talk about processes and systems, I have broken them down into 4 spaces. Number 1 is the onboarding process, right? That's general for everybody, but it's acquisition. How do we acquire an asset? So the process of building the relationships to get access to the tapes so that then you can move to due diligence, waterfall due diligence, and then do a deeper level of due diligence, and then acquire the types of assets that you're comfortable with taking through the life cycle, whether that be non-performers, non-performers in California, non-performing mobile units in California, non-performing mobile units in California with land contracts, right? Land contracts. Okay. Non-performing land contracts in Oklahoma. Non-performing land contracts in Oklahoma with just
all right,
land,
I
right?
get it.
So that's that's just acquisition, right?
Right.
So then you have to match those with the right person, right? Your client. And then you move on to protection. How are we going to protect this? Okay, we've got taxes, insurance, recording, and servicing. Okay, now which services are we going to use? Which insurance company are we going to use? When do we pay these taxes and how do we pay these taxes? You know, recording. Oh, are we recording it ourselves or are we recording it through a lawyer? The process, right? After protection, we've got management. Management is like the heart of the whole thing because after you get your asset in with a servicer, we always want to use a servicer. Please do not mess around with that. Some people I keep talking to, they're like, oh, we don't use a servicer. Please, please. My suggestion is strongly use one. Okay. You got to manage it. Okay. What does management look like? So management now looks like the day-to-day monitoring. Now, this is what you're going to spend most of your time doing. It's at the heart of my job, asset management, right? Okay. What does that look like? Monitoring taxes, monitoring whether it's in a legal recovery situation. Well, if it's in a legal recovery situation, then you're talking to specific types of lawyers who happen to be debt attorneys, right? Hopefully, those are the ones that you're speaking with because they're going to extinguish the contract through what? An eviction or a foreclosure? I'm not sure. Okay. Is it an REO? Okay, well, if it's an REO, then we're going through eviction, right? Whether it's a if it's a note and is going through foreclosure, um, et cetera, until you extinguish the contract. And there's also the recording piece that goes through there as well. So also while I'm managing, you're tracing and tracking about 3 to 4, maybe 5 conversations per asset. What are those conversations? Well, those conversations could be taxes, they could be insurance, they could be the customer, or rather the borrower is complaining, or they can't make a payment, or they're trying to figure out when their lease is up and they need an extension, et cetera, et cetera. So you have those conversations that are going on each of the assets at one point in time that you have to monitor. So that management piece is really, well, it's also strategy too, because you're talking about how do we exit this along the life of an experience or a loan, right? Here's one interesting situation. One asset went through tax lien, and then we had a buyer. So either way, let's say you have a buyer on a note, right? You have a buyer, and it could be either an investor or maybe it's an REO, and you have this real estate buyer. Well, what happens when that buyer goes a bust? They're out of the deal, right? And the markets change. Market's going down. You're not going to see that value that you saw before. I mean, your budget
That
sheet
doesn't happen. That
changed,
never
right?
happens.
Yeah. Oh, shoot. In management, guess what happens? You've got to shift gears, right? You've got to turn the dial. You've got to be able to be flexible and nimble enough to understand that original pathway where you had a buyer that was in tow, they had signed their purchase agreement, it expired, right? The purchase sale agreement expired, and then they're like, "Well, we're out," and the market
Okay.
just went like this. It did one of these bad boys, and you're like, "All right, now we have to do we remodel? Do we rehab it and then rent it out? Do we do a short sale? What are we going to do here?" So that takes up a lot of my time and energy on a day-to-day basis to give each of my JV partners time and energy that they need with their assets, to give the larger customers with more assets going on in terms of management, whether it's management of real estate because it's an REO position, or it's management of the notes, right, in those positions, and giving them weekly enough time and energy to make sure that I'm communicating with all the different vendors. This is just in management, right? So the different vendors are who? We got real estate agents. You have your property maintenance crew, SGP now being a great example. Give them a shout out. All right, I'll take my $10. Um, lawyers, all right, and they're not all equal, right? Because you've got some lawyers that are your recording lawyers, and they're doing debt recovery, et cetera. And then you've got your real estate closing lawyers. So you got to depend on where you are there. And who else in terms of vendors? Oh, services and insurance, right? So you've got to manage those communications, those relationships on a regular, ongoing basis, right? I'm texting someone every hour probably on any of those assets that are moving. Then you have your local government as well that you need to make sure they're happy. Your assessment department of your municipality, your sometimes it's a environmental department because there may be some violations on certain properties. That takes up a lot of time. I said 4, so here's the 4th. It's exit. It's exit. Okay. Because when you sign over the papers, you ain't done yet. You think you're done. You ain't done yet.
Not
So
done.
when you sign on a dotted line, for those that are unaware,
Mhm.
once you come to closing table and maybe money has been wired, um, you have conveyance documents. You've got the warranty deeds and the paperwork and the collateral that needs to be transferred from your hands into the buyer's hands. That's a process. You got to make sure all the documents are there, they're all present. And then you have to generate new documents sometimes, which are your next leg. And so an example would be NAP. I brought them up. NAP signs over documents to Z. Z then sells it to me. Guess what happens when Z sells it to me? The transaction's complete, but then there are trailing documents that need to come to me, Engerman Estates, that she would have to generate, showing that she relinquishes her rights and privileges to that asset. And that would be in the form of a QCD. That could be in the form of, those are your deeds, right? Warranty deeds, they could be special warranty deeds, and the assignments. So the assignments are assignments of seller's interests, the assignments of land interests, et cetera, lease interests, et cetera, et cetera. And so those documents need to be lined up. They need to be formatted appropriately for each township. That's on the exit. So those are the 4 areas of this game that I am managing. And
that's a lot. So approximately, you don't have to give an exact number, but are you managing in your portfolio? Are you managing tens of hundreds of of notes?
It feels like that. It feels like tens of hundreds. 5711, 5711, 5711.
Fives and tens of notes.
So here's the number I always play with. When I first came in, I like inherited about 45 notes plus my own, which was about 2 to 4 at the time. And so I had about 48, 50 that I was managing one time. Since then, I acquired another portfolio of 15 real estate assets. And so these are basically the REO side of a note, and plus 5 more notes. And so in total, at one point, I was up about at 65, right? 65 to 70 total across several JVs and 2 bigger portfolios. To date, we've liquidated quite a bit of that. There was 31 lease options in there, and we're down to 2 more. So that's 29 we've offloaded, which is nice. And that puts us somewhere in the range of 65, about 30 some odd notes.
Still a good number. That's still
it's still a big number. What makes it big is the fact that a large number of them are non-performing. That's what makes them big. And so here's what I think the magic of what I do comes into play. Understanding the big picture, as well as being able to come down to the micro scale. So seeing the macro scale and the micro. The micro meaning dealing with all the details of each asset one by one and all of its, I wouldn't say flavors, all of the flavors, its characteristics. I would say that. And then zooming out and saying, hey, look, this is an overwhelming amount of non-performing assets and sub-performing assets. We should really look at these performers. We should really intentionally go after some so that we can balance out this portfolio.
Right.
So it's not just a selfish thing, is I want to have less quote unquote responsibility, because even performers need work. People don't think that performers need work too, to keep them performing, keep them compliant. So what it does is it allows a portfolio to have less stress. There's less stress for the owner of the portfolio, less stress obviously for me, but less stress on your systems. And that's where I think strive to move towards. Right now, much of my work is manual. I'm in a process of automating many of my processes and systems. And it's a slow go because of all the work that I've had to do, all the back work. I've got to clean up a lot of stuff. But when you're a portfolio manager, you want things to run smoothly. And when you're a portfolio owner, you want things to run smoothly. You want a smooth process, you want a smooth system. But most importantly, going back to my first statement of my job, my purpose is to maximize and optimize the portfolio so that it's running like a well-oiled machine. That becomes very disjointed when you're imbalanced with so many non-performing issues. So how to add those performers in? Do they have the characteristics of the things that we want? I do believe, we talk about a hazing process, especially with note assistance program. You go through this like first call with Jazz and you get hazed. But but this happens with people in the industry, in the note industry. You get hazed when you're going through these non-performers. I'm gonna tell you right now, I'm battle tested. I'm like a Marine up in this bad boy. I have been running through the ringer I'm still standing. I'm really comfortable and confident, but in a very short amount of time, I've been able to run through CFDs, right? LSOs, performers, non-performers, all, many of the states we've been
Oreos, all that good
right?
stuff.
So picking up lawyers left and right, picking up real estate agents left and right, picking up relationships with the municipalities left and right, cataloging those. I've been able to do that in a very short amount of time with just 70 notes because of the stress of the non-performing relationships. But luckily, I've been able to get through that with relationships, with the mentorship, with our community. And I'm very happy and proud of that because it's just grown the relationships that I've had to be more fruitful, grown the relationships with my clients more fruitfully, I'm hoping. We will begin to see a lot of those fruits this year. Wink, wink. Come to fruition. It's happening. And when it does, we can wash, rinse, repeat, and know that we're battle tested and smooth out those systems and processes. So
Absolutely, absolutely. So, to kind of close this out, what do you think? You probably already alluded to it, but what do you think your path forward is going to be in this year in 2023, as far as either growth or what direction you want to go in, where you want to be, and all that?
that's a great question.
That's a great question. I got
Um,
you.
it is such a
Expecting
good
that
one
one.
because it's forcing me to reveal a couple of things, which is all good.
Oh, okay. Well, you don't have
It's
to
all
reveal
good.
any secrets. Just be as vague as you need to be, but without having to
um,
reveal any secrets.
so no, so because of the efficiency piece, I'm going to independently. Engerman Estates is independently run. It's mine. I'm building the automation processes right now to keep that, make that on autopilot, right? Get that on autopilot. Creating partnerships and building forward so that we can scale up because I'm all about optimization and scaling because that's how we grow and that's how we expand our influence and also can help more people. We always talk about make money go to heaven and invest, profit, give, and give back, right? In various ways. That's kind of what motivates me because I want to see good coming out of what I'm doing. Otherwise, it makes it really useless, and I don't have anything to stand on and look at my kids and go, "Hey, look what Daddy built," right? Because it's not, it's a selfish entity. So I'm growing up in a couple different ways. I'm partnering with people to build two more companies, and so we're going to build out a company that takes the level up and allows for investors that are really serious to engage with us on a bigger scale, to go to scale. So that's something that I'm working on. And then there's another company, which we will reveal a bit later, which is going to automate a lot of these processes. We're jumping into an incubator here in Scranton, Pennsylvania. That will happen in March. We're excited to launch that experience. That should be really cool to see how do we optimize this for the secondary market. So people don't understand this, so I'll give you a little education. The primary markets for mortgages are where the banks originate the loans the first time. And then they end up selling it to the secondary market. The secondary markets technically are 50 mil to about 15 mil tranches in that range. The reason is because the Fannie Mae and Freddie Mac are really where you sell them to next, right after you originate them, really. And then the tertiary markets are everything under that. That's the retail market where I started, where I began, where we are now, right? Under 15 mil for the under 15, 10 mil in that range. Most people are getting in there, they're starting there, they're passing things around back and forth. But as you can imagine, once you get those notes down at that level, they might have exhausted their lifespan. They may be non-performing for the most part. They're sitting in that range, in that bubble. So we want to build out a system and process that can help accommodate the secondary and tertiary markets, smooth it out, create more liquidity, because if people want to go do their research, trust me, we've got over $30 trillion in debt out there, It's crazy. And the banks are over leveraged. Banks are so over leveraged right now. Go check out FDIC if you want. Go check out videos if you want. You go do the research. I've already done it. The money that they have that is FDIC insured, the money that they actually physically have that is FDIC insured, is about 0.012 cents to every dollar that they say they have, because there's no money there, there's no liquidity, there's nothing real there, nothing tangible. In other words, banks in general, in the banking system in general, is about 79x over leverage. So do the math. I can walk you through it.
Look,
But
I was not a math major, okay?
yeah, yeah. So the legitimacy of that is this: the general banks out there do not have the liquidity and money that they say they do. They've borrowed against borrowed against borrowed against borrowed. 79x. So
but what do you think that means or doesn't mean for a repeat of the 2008 market crash?
Great question. So here's what I believe, and it's tangible to what I'm talking about with what I'm going, where I'm going next. I believe that the markets will correct. I am not a doomsdayer. I'm a realist. I see trends. I see markets. I see them happening. You look at car debt, car loan debt. You look at school debt. You want to look at mortgage debt. It's all together right now, and it's all going to be a hot mess. And it is right now. And maybe there's a slow fall before there's a steep one, but eventually people are going to say, I'm done. I'm fed up.
Can't do it anymore.
I can't do it anymore. And one of the reasons is when unemployment reaches, unsustainable levels, and then people can't pay their bills. If you go look at credit card debt right now, go look at how it's increased. Go consumer spending. Go check it out. But what I'm saying is that in micro markets, they will drop sharply. I think their markets will correct 20% or more in certain markets. In certain markets, it'll be even more than that. It'll be steeper. But certain markets will remain that have been traditionally strong. Pittsburgh, Harrisburg, etc. Those areas will stand. It'll probably decrease less. Let's put it that way. But not every single market will collapse, but many of them will. And so what does that mean? Well, when this thing happens, when this collapses hard, which is already collapsing, we're already in a recession. Pay attention. We're already in one. When depression levels are a different story. So when that happens, at some point, a tipping point, there has to be liquidity somewhere. We want to be able to bring liquidity. These loans will go bad. People are talking about a bail-in, which means debt forgiveness in some spaces, too big to fail, etc., which is crazy. But what will happen is you'll see more foreclosures. You'll see more down markets. You'll see obviously less ability to buy up these assets. You're going to see them overbloated. It's all going to like this, right?
Yeah.
So what we're trying to do is figure out how can we provide liquidity to these spaces for investors that are savvy to understand there's opportunities there, and help banking systems have off ramps so that they don't feel stuck. Right. Can we provide a padding of some kind to help prevent that, or not prevent it, big picture, because there's no way we can buy up all those trillions of dollars. But at least provide an option for an off ramp. And so we're trying to bring solutions to the table for this massive crisis that we see, to answer your question.
Well, okay.
You can't talk about it yet.
Yeah, okay, all of that.
Yeah.
Jason, I really appreciate you.
Yeah,
I appreciate you. And reach out to Jason if you have any additional questions, or maybe if you're interested in working with him in some capacity. He'll be available for you to reach out to. I want to thank you again, young Dr. Engerman, for joining me and imparting your wisdom. And I will go and look up some of that stuff you were talking about. Seriously.
FDIC. Oh, yeah.
Did it.
Thanks. Thank you. Take care.